This is the NYA daily chart with the new Pitchfork in black anchored at the same spot at the high of 2022, where the other one was anchored in purple here. So you can see that the old one had a downtrend action and the new one in black has a slight uptrend action. And it fit nice right across this peak here and this one here. So this is a really good placement. And it has the add-on tines here that I put in right there. And probably this one here. And I will zoom in to see this busy area here for the daily chart. Okay, zoomed in. We can see that I will not be moving these tines again for this pitchfork, as tine or pitchfork 1 up here is anticipating a move up there. So that's tine 1, then number 2 here, number 3, number 4, and then number 5 right here. And zoomed in even further, this horizontal line here at 191.49 is the breakout horizontal line where we did the measurement rule. Brings it up to about 20,000 something. It's on the big board. And then the one here, 191.01, is from the lows of some of these. So got this one and this one here for a small zone, and this one here at 18,797 from this pause over here. So I stopped the top of the broadening top pattern here, this black line, and created a dashed extension. So we'll follow that along, but technically it stopped here at 191.49 right there at this open here. So this 18,797 area looks like a interesting area for doing some buying if it can make it down that far. And in the big board, here's that horizontal support level, 18,797. D-Wave up wave 2 will print well before that happens, as it will print more than likely tomorrow with a tick lower than this low here, 19,086. More than likely D-Wave up wave 2 will print, and D-Wave up wave 2 could make it all the way down to 17,561, and if it does that and ticks lower than that, then the D-Wave up wave 0 will shift over. It's already got a 0 there. It will shift over to wherever that happens here. And there's some old pitchfork levels there. And it looks like the 200 moving average is there, along with the EMA in black right there. So a lot of support down there, but it could shift the 0 over if things really head south in the world. Anyway, that's D-Wave. Around that area is trend factor down 1. So I actually like to do my buying when it hits trend factor down 2, but that's pretty far away. So let's focus on 1. So that's there. And it has a little momentum built up. The daily pivot is at that level for this month, 18,717. So around that area, somewhere between the horizontal line and the daily pivot. So sometimes you can just do the math and cut it in half and see where that ends up and start some buying right in between these two. See what happens at the trend factor down 1. That gets qualified and confirmed, and all bets are off and we could be headed down to trend factor down 2, but one step at a time. This looks like a pretty good buying opportunity if it makes it down to here. It has to take a pretty big jump from the daily sequential sell risk level, which it closed under. Not a good sign. So that's like 160 points away or more here down to the aggressive combo sell risk, and then the horizontal support. So like we really got to have a disaster for it to make it down to here, but if it does, it's a good buying zone. And then conversely, if it can make it back above the top of the broadening top around that level and start moving up in earnest and get past these other all-time intraday and closing highs here, well, then we're off to somewhere between 21 and 22,000. Yeah, here's the breakout target for the broadening top measure rule, 20,700. And then the qualified and confirmed daily 100% propulsion exhaustion up. As long as we don't get another propulsion 100 momentum level to print, just keeps going up, well, then this stays valid, but that could be negated if a new propulsion momentum up for 100% prints, and after that, then get a new level. But targets to think about right now, and that's if it can make it past the daily Pitchfork 1 at that level. Get past that in earnest, then yeah, for sure, up to here, or it could be down to here, possibly here.